afternoon, ladies and gentlemen, and welcome to today's edition of Top Tier Profits with Shemie CPA. My name is Matthew Lippman, Senior Manager here at Shemie CPA, where we deliver premium accounting services to real estate investors to help drive profits and growth. As always, I'm here with our founding partner, Charles Shemie, CPA CA, that is here to have a nice discussion with me. How are you doing today, Charles?
Great to see you, Matthew. I'm doing well.
Good to see you too. Good to see you too. So for today's discussion, I thought it would be an interesting topic to talk about a question that we as accountants we field from clients, from friends and family a little more often than necessary, I would say. But the question is, should I pay my contractor in cash? And it's not always a contractor. And should I pay any other service provider in cash? And I think that the general answer to that question is no, because we like to be kosher. We do everything by the book, and when you get into cash, it's a little bit risky, wouldn't you say?
Yes, absolutely. Although cash is definitely a legitimate way of transacting. Assuming that the cash that you have was received, in a legitimate fashion. So, I think it's a great discussion to have, and we can look at and see, if there are any savings, if there are any advantages to paying your supplier in cash. Absolutely, Matthew.
Fantastic. So I thought the best way to illustrate this would be to just jump into a small example that I have prepared already. So I'll just share my screen, and I hope that the live community out there on Facebook can see the screen too as I walk you through this example. So the first example is if you hold the real estate inside a corporation, and then we'll look at if you hold it outside a corporation personally. So if you hold the real estate inside a corporation and you're not getting your small business deduction because you have 5 or less employees, you're going to be looking at all of the income that you receive from that corporation as being taxed as passive income. So your tax rate is going to be around 52%, which we see here. So we're looking at an example where you're looking to contract a general contractor for about $100,000 job, and you'll get you'll pay a sales tax of 15% in Quebec, or 14.975% here. So the total cost of the contract is going to be $114,975, and because you're getting a receipt for that full amount, you're going to be able to deduct or capitalize that full amount. So in the long term, whether you deduct it immediately or you depreciate that capitalized item over time, you're going to see a full tax savings over the life of that cost of 52%. So your total tax savings are going to be $59,000 in this particular example. And after-tax savings are going to come out to after-tax costs are going to come out to $55,000 because of all the tax benefits you're getting from that deduction. Whereas if you look at another example where generally when you pay cash, you don't get a receipt, and obviously if you don't get a receipt, you're not allowed to deduct that, or if you do deduct it, you run pretty high chances of the CRA knocking on your door, or Revenue Quebec knocking on your door and disallowing that deduction. So in those cases, you won't be charged sales tax. So the full cost, the full cash cost of the project will be $100,000. But because you're not getting any tax savings here, you're not going to have this tax recovery of $59,000. So your total cost is just going to be the $100,000 that you paid the contractor. And as you could see, there's a pretty big difference here between the after-tax cost of paying a contractor cash or or paying them legitimately through your bank account via wire or check. So now I think we could, you have any other comments on this, Charles?
You seem to be doing a good job.
Okay, great. So I'll let you kind of talk about this one, or about owning the asset personally.
Look. Okay, let me make it in a more simpler way. Okay, Matthew.
Please.
Whichever way you go, whether you hold it your real estate personally or you hold your real estate to your corporation, if you're going to pay cash, then you're definitely going to be at a disadvantage because you're not going to be getting the tax savings. Bottom line. So no matter whichever example you want to give us, it's gonna come out to exactly the same thing. So obviously, if you're going to pay cash, you're going to want to reduce the price accordingly. So don't fall into the trap of saying, I'll pay you cash, and you assume that you're going to be ahead, because you won't, because you're not going to get that tax savings. So that's really what I have to say in a nutshell, Matthew.
Right. So you have to go to the contractor and basically negotiate with the contractor to see if they'd be willing to reduce their price in exchange for taking it cash.
Yes, absolutely. So.
And that price reduction, is there a specific amount, or do you have to kind of look and see? It depends on the example when it makes sense.
Well, I mean, look, you know what your tax bracket is. It's about 30%. And personally, depending on the individual.
Yeah.
But a combined effective tax rate is about 30%, and versus a corporation, you're around 50% tax bracket combined. But again, if your income is high enough personally, then you'll be at the 50% tax bracket also. So bottom line is that I would definitely not go. I would definitely go close to 30 to 50% reduction in the price, to make it justifiable to pay cash.
Exactly what I was going to illustrate in this example. You said it perfectly, but you see, even in this example, and this is when it's held personally, you're saving $20,000 if you don't pay via cash. So you'd have to reduce this cost, the cost that you're actually paying the contractor, by
I also want to mention something very important, Matthew, is that sales tax that you have there. That's really aside from the fact that if it's a personal residential building, but if it's a commercial building or an industrial building, that sales tax is reimbursable. So in fact, your savings would be even that much higher having it in the corporation.
That's a very good point.
And having it to be paid via non-cash method.
Absolutely.
So in your example that you have here, you're assuming that sales tax is not reimbursable, but that's only applicable to residential properties. So that's an important thing to keep. So now it's even more reason for me to tell you that it's not worthwhile to pay by cash unless you're receiving a substantial discount.
Agreed. There's a few factors here that we do need to consider when making this decision, but almost all the time, it's going to be better to get a receipt, do it the legitimate way, pay by wire, and deduct those costs appropriately on your tax return as you move forward, but you have to make sure that you deduct them in the right way, so you get the deduction as fast as possible,
and always also, Matthew, if you're going to pay by cash, and like you said, the supplier will not provide you a receipt, that's a really big red line that I think you should not go there, because look, you know, you need some type of warranty on your on the work that's being done, and to not have a receipt, I don't think, you know, is a good business decision to go with.
Absolutely.
So there's there are many facets of why you should not go that route.
Absolutely. I totally agree with you. There's many legal implications, I'm sure, that we can't comment on that have to do with the issuance of the receipt, and other factors that are at hand here. But I think that the general rule is to go the legitimate way. Take your receipt, pay via wire, and make sure all of your deductions are captured properly, to maximize the tax benefits on those costs.
Absolutely.
Okay, great.
That was
So I
an
think
interesting conversation. I mean, that was an interesting, and it was a very important conversation. I'm glad that you brought it up, because, like you said, a lot of people are asking us these questions.
A lot of people ask these questions. Sometimes, you know, some people think it sounds cool, pay them cash, and really they're not getting any benefit from it at the end of the day. So it's important to clarify these things and how they work with our clients. And I think we've done that today. So thank you for spending time with me. And thanks to our viewers for spending time with us to learn more about this interesting topic. And remember that if you need any more advice on real estate, or if you have any questions about anything related to real estate, really, you can book a call with us using the link below or the link in this group. And until next time, we wish you the best. Have a great week. We'll see you next week, and happy real estate investing.